Welcome to the Deep Dive. We're here to sift through the sources you shared and pull out the key insights. Today, we're taking a close look at Mahindra and Mahindra, M&M. Now, you probably know them for their SUVs, their tractors.
Yeah, the iconic ones.
Right. But as we dug into the material for this deep dive, it turns out there's quite a bit more under the surface. Our mission, really get to the heart of this diversified company and, what makes it tick.
It's genuinely fascinating, the sheer breadth of M&M's diversification. I mean, it's not just being the world's biggest tractor maker by volume.
Which is already huge.
Huge, exactly. And a major auto player, too, with the Thar, the Scorpio, the XEV 700, popular models. But then you've got their significant presence in IT services, that's Tech Mahindra.
Right.
Financial services with Mahindra Finance, renewable energy, even hospitality with Club Mahindra.
Like you said, that banyan tree idea.
Precisely. Where each business kind of supports the others. It creates this interconnected, resilient ecosystem. And this isn't just, random growth. It feels like a very deliberate strategic choice.
A strategy for what exactly? Growth or?
Well, both, I think. A diversified growth engine, definitely. But also a really powerful risk mitigation strategy. Think about it. If the auto market takes a hit, their tractor sales, or the IT side, can provide a buffer. It builds resilience.
That makes sense. That banyan tree analogy really sticks. And, thinking about strategy, it makes you wonder about the leadership behind it. When I was looking through the materials, one thing really jumped out, M&M's role in the Satyam computer services scandal.
Oh, yeah, that was massive.
Huge.
Yeah.
India's biggest corporate fraud back then, right? Something like 7,000 crore. Was that about $1.4 billion US?
Around that, yeah. The founder admitted falsifying the books. A total mess.
And M&M, Tech Mahindra specifically, they actually rescued Satyam in 2009.
They did. And that wasn't just a financial move. It was a huge gamble on reputation, too.
But it paid off.
Incredibly well. That acquisition led to a really remarkable turnaround. Satyam became India's fifth largest software services company. It really showed M&M's belief in IT and, frankly, their commitment to ethical governance kind of set them apart.
So you connect that strong leadership, that strategic thinking, maybe even that ethical stance to their overall financial health.
Absolutely. It underpins their resilience. Now, they did hit a rough patch in 2020, like many companies globally. A significant loss, 321 crore.
Right. The downturn affected everyone.
But the recovery since then has been remarkably strong. Sustained growth, record sales, record profits in the following years. And you can actually see it in the numbers, too. Look at their operating profit margin, the OPM.
Okay.
It shows how efficiently they make profit from revenue. There's a consistent upward trend. It climbed from about 12% in 2015 to a projected 19% in 2025.
Wow, 12 to 19%. That points to much better operational efficiency, doesn't it?
Definitely, across the board.
Okay, so they've shown resilience. They've got this diverse structure. What about the future? What does this mean for them and for you listening, maybe as an investor? They're not standing still, are they? We see these aggressive moves, especially in electric vehicles.
Yes, significant investments there.
Across different areas too, ESUVs, three-wheelers, even electric tractors.
That's right. And they're gaining market share fast, like 44.3% in ESUVs, for instance.
And strategically, they seem focused on the premium end. Premium SUVs, higher margin models.
Which clearly helps profitability. It feeds back into that whole banyan tree idea, planting new, strong roots for the ecosystem.
Okay, so the future looks ambitious. But what about the stock itself? Is it, a smooth ride?
Well, that's an important point. The stock does show higher volatility. Its beta coefficient is 1.69.
Meaning bigger swings than the general market.
Exactly. Larger price movements, up or down. But if you look at it through a Benjamin Graham valuation lens...
The intrinsic value approach.
Right, focusing on fundamentals. That analysis suggests the stock actually appears to be undervalued right now. The current price is around $3,159, but the calculated intrinsic value is closer to $4,349.
So a potential margin of safety there for someone looking long-term.
Potentially, yes. For long-term investors, that's often appealing.
All right, so let's wrap up this deep dive. What we've really uncovered here is a picture of, resilience, wouldn't you say?
Definitely resilient.
Mahindra and Mahindra, strategically diversified. You've got visionary leadership demonstrated over time, and these really ambitious future plans, especially in EVs.
And maybe a final thought to leave you with. Considering M&M's track record, adapting, diversifying, how might that banyan tree strategy evolve next? Think about emerging tech like AI. How could they leverage something like that across all their different segments, tractors, cars, IT, finance, to boost their global competitiveness even more in the coming decades? Something to ponder.